of AMCF. AMCF is the Association of Management Consulting Firms. We are a nonprofit global trade association. We represent the breadth and diversity of the consulting industry. Getting some feedback on the line if someone could mute their phone. Thank you. So AMCF provides the opportunity for leaders of consulting firms to convene and share knowledge, best practices, and solutions to common challenges to help them run their firms more efficiently and more effectively. Our mission is to promote an environment which fosters the success of management consulting firms and the value that they deliver to clients. So before we get started today, as with all AMCF events, we do encourage your participation. Feel free to type in your questions throughout the webinar and just use that question panel there in the upper right-hand corner of your screen. And we'll address them in the order in which they're received at the end of the webinar. However, throughout the webinar, if you have clarifying questions, we will pause and address these questions immediately. Let's get started. We are really thrilled to have had the opportunity to have worked with DeSantis Brendel on this project. They're members of AMCF, and they're a premier strategic branding and marketing advisory firm. They help their clients develop brand strategy that aligns with business strategy, and they work solely with B2B clients. So today I'm thrilled to welcome our presenters, Jonathan Paisner, Managing Director of Brand Strategy, and Seth Margolis, Brand Strategy of DeSantis Brendel. Thanks so much for joining us, guys. I'll turn it over to you.
Great. Thank you, Sally, and thank you, everybody, for joining us here today. This is Jonathan Paisner speaking. I will be joined, as Sally said, by Seth Margolis, and you'll hear the two of us kind of tag team our way through this presentation. Sally gave you a little introduction about DeSantis Brendel, so I won't go into any more detail about us. So let me just move forward with the presentation here. This is our brand influence guide, Big Management Consulting, Big MC, as we've been calling it for short. This is our second such research initiative where we look at the influence of brand within a specific sector of the market. We had done a similar study last year with the venture capital, in the venture capital marketplace. And here we've turned our attention to management consulting and looking at the role of branding in management consulting. How do management consulting firms think about and employ their corporate brands? So before we get started, let me just give you a little bit of a word about how we think about brand and how we define it. We look at brand fairly holistically, that an organization's brand is reflected in its distinct values, its unique personality and a vision for what it stands for. And this then becomes embedded in the culture and shapes and guides how the organization presents itself and goes on to carry out its mission, both internally and externally. So we're not looking at brand as merely a logo or merely an ad campaign or anything of this nature. It's really a fairly holistic view on the organization and its reputation as that comes to life in many ways across communications and the experience. And within that, we're turning our attention to the management consulting space, and here we see a market that is changing. It seems to be forever changing, from consolidation to firms extending into adjacent markets. You've got strategy firms moving downstream. You've got implementation firms moving upstream, and change is something of a constant in this space. And so as we look to that kind of backdrop, these are the kinds of questions that we set out to answer in this study. How is brand being used as a business asset? How do branding and marketing help firms achieve their business goals? How does brand compare with the reputation of partners versus the reputation of the firm as a business builder? And how does that change relative to the size of a firm as firms look to their partner's reputation versus the reputation of the firm? And then we'll get into a little bit of detail on the feedback that we have about effective channels for connecting with key audiences and for building brands. So how did we go about this study? In partnering with AMCF, we sent out this survey to AMCF membership and some extended database from AMCF, and this was in the form of emails. And people then participated in an online survey through which they self-directed. They answered several questions about themselves to give us a sense of where they were coming from as individuals and with respect to their organizations. So functionally, we see a split here across maybe about half the people if you look at service line and corporate strategy, head of practice, and industry vertical. And you kind of lump those together, and we've got about half of the respondents, and we had about 76 respondents to the entire survey. About half of these purple people were in service delivery. And then we have other functions. About a quarter of them were in the marketing function. Geographically, we see about 3/4 of the folks were either predominantly nationally U.S. with some global reach or define themselves as global. There were respondents from public firms, from privately held firms, and from partnership. And again, this is all how people describe themselves based on the questions that you see here. And as we look at titles, you can see that the respondents, and perhaps it's somewhat expected through how this survey was distributed, but the respondents here are of a fairly senior profile, which is great and really gives us a very strong sense of confidence in the results and the indicative nature of these results. And then we look to split our firms, and you'll see these splits throughout the study. We really wanted to get a sense of the different role that brand plays and the different role of, as I mentioned before, the reputation of partners and leadership plays across firms of different size. We really see some distinct differences as you think about organizations that are over 5,000 employees, and there were certainly firms that were significantly larger than that still. But the differences in how a firm of that size or larger employs brand versus a firm of, say, less than 50. So these splits from the boutique to the gaining scale to the straddlers to the big and bigger are splits that we will continue to refer to throughout this discussion. We've got 6 big findings that we've divided our report into. So here is where Seth will step in for the first couple, and then we'll kind of trade back and forth. So Seth Margolis.
Hi, everybody. Thank you, Jonathan. So the first question that we asked, or that we're seeking to answer, is how do you define your brand? So how do the consulting firms that responded to the survey, what kinds of words do they use to describe the current brand of their firms? And really the answers, these were write-ins, were all over the map. I mean, collaborative, client-focused, growing, complex. It was a plethora of words that you used to describe your firms. But some themes did emerge. So for instance, this notion of being client-focused, of being a good listener, customer-centric, a lot of you responded with words or phrases like that. Many talked in terms of, the results that you get. So decision-oriented, data-driven, dedicated appeared frequently. A lot of people mentioned values, not surprising in this type of field. Honest, integrity was a word, ethical. Sometimes overused words in any field, but particularly in professional services. But they did come up quite a bit when we asked, again, what words would you use to describe your brand? So no real surprises there, but there was some interesting findings once we segmented responses by firm size, the sizes that Jonathan just went over with you. So for instance, large and small firms tended to coalesce around a handful of attributes. So high-end, intelligent, quality, premium, expert. These were the words that appeared over and over in the largest and the smallest of the firms. But what was interesting was that the firms in the middle had very different types of attributes. So ambitious, growing, complex, hungry, continual learning, flexible. And you can see if you go back, it's a very different series of words and phrases that they use. I think you could generalize and say that these mid-sized firms, are projecting a sense of flux, of striving, of constant change. They don't really have that sense of we've arrived. It's more the sense of we're striving to get someplace. And what's interesting about that is that you can understand why the large firms might think of their brands that way, but it's actually the small firms also think of themselves as more established, whereas it's the firms in the middle that feel that seem to feel that their brand is reflecting a state of change or flux. We also asked you what management consulting firm brands that you admire and why, again, with an emphasis on brands. And this is a word cloud of the results that we got. So the size of the names of these firms is relative to the number of times they were mentioned. So not really very surprising. You can see McKinsey sort of jumping off the page. Deloitte is quite big. BCG is very big. Bain & Company down in the lower left. And then the others in this word cloud were somewhat smaller. And then we asked, so what words would you use to describe these brands that you admire? And no surprises really here: strength of resources, pedigree, well-defined. A lot of the words that the larger firms told us describe their own brands, in fact. And again, what seemed to pop out here is that these large firms and the small firms who responded to our survey, the words they used to describe themselves actually aligned pretty well with the brands that they admired. So if you look on the left, the respondents to our survey, the large and small firms, talked in terms of quality, high-end, winning, premium. And if you look at the right, the brands they admired, very similar type of words: gold standard, high quality, pedigree. So there's quite a bit of alignment between the large and small firms and the firms that they admire. But mid-sized firms, those that fall in the middle, actually feel quite differently. So if you look at the words on the left that they use to describe themselves, again, those sort of change, flexible words that suggest a sense of flux: evolving, hungry, active, fast-paced, growing. Not bad words, by the way, but definitely, sorry about that, but definitely, words that describe less stable organizations. And then you look at the brands that they admire and the words they use to describe those brands: well-defined, tell their story well, consistency, well-defined. Very different in terms of how they describe themselves and how they describe the brands that they admire. So the takeaway from this would be, it seems that mid-sized firms see their brands and perhaps their firms in a state of flux. And that's, as I said, that's not necessarily a bad thing. It's good to be flexible. Change can be positive. But I think from a brand perspective, it does suggest a lack of clarity and confidence. Our takeaway from this would be that small firms and large firms have a greater sense of confidence in the brands that they're projecting, and they align very nicely with the brands that they admire. Whereas these firms in the middle feel that their brands are changing, perhaps reflecting the fact that their firms are changing, and the brands they admire reflect a lot more stability and definition. The second question we set out to answer here was, what drives a brand in management consulting? In consumer packaged goods, in financial services, there are well-identified drivers of brand. That may not be so true in management consulting. So we wanted to ask survey participants what drives their brands. Here you see, again, segmented by the four categories that Jonathan talked about: the boutiques, the gaining scales, the straddlers, and then the big and biggers. Thought leadership is seen as a driver, a key driver, by firms of all sizes. In fact, with the straddlers, the sort of 1,000 to 5,000 range, it's actually number one, but it's quite near the top of all four, particularly the three to your left. Heritage, perhaps not surprisingly, grows in importance the larger the firm gets. And I think we can understand that. If you look on the left, I would imagine that many boutiques that responded were actually quite new. So obviously, a heritage is not going to be a key driver of their brand. Go all the way to the right, these large firms have been around for a long time. If you think of the McKinseys and the BCGs and the Accentures, you know, heritage is something that they can actually build a brand with and have built a brand with. And a distinct position in the market tends to grow with size. So I think if you look at the big and bigger and you think of some of the firms in that category, people really do understand where they stand, the services they offer, what they stand for, the types of people they attract, and that diminishes somewhat with the smaller size. The market is not as aware of what they do. They don't have a distinct position, so then that is not a key driver of their brand. Interestingly, strong leadership, again, as a brand driver, declines as firms grow in size. So take a look at the left at the boutique. It's the #1 driver of according to the respondents, of their brands. And I think we can understand that a lot of boutiques are formed by one person, sometimes one or two, who comes from industry, sometimes from government. So strong leadership is very much a part of what their brand is. But as you get very, very large, you can't really build a brand around any single person. Although you get a little bit of a pop all the way on the right with the big and bigger. I think maybe that might be the people who answered potentially were the leaders, and so thought that strong leadership was in fact a key driver of brand. But I think it's interesting that that notion starts to decline as you move to the right along this scale. So it does seem that as firms grow, the importance of leadership starts to diminish. Again, not the importance of leadership, but leadership as a driver of brand. And I think the key for firms as they start to get bigger, to the right-hand side of that chart, is to figure out, well, if we can no longer hang our hat on our leader, sometimes it's a celebrity partner, what is going to drive our brand in the future? I think that's a key imperative for firms, particularly in that middle range. I'm going to turn it back to Jonathan to take you through the next couple of findings.
So following on that kind of theme, do partners equal brand? And where might that transition start to happen between the smaller firms and the larger firms? So maybe to no surprise, at smaller firms, so our boutiques and our gaining scale, the founding partners are still actively involved in the company. So even at the 50 to 1,000 employee level, 80% of the people say yes, the founding partners are still actively involved in the company. But then as firms grow in size, the reputation of the partner changes in how that is really utilized with respect to the business. So as the firms grow, that partner reputation evolves from really a driver of new business as firms get larger, being more of a driver of relationships. And maybe this isn't really unexpected, considering how boutiques and gaining scale firms grow and very much are centered around the partners and the founding partners. But it is interesting to see where that split starts to happen. And you see a very distinctive pattern here in the role that the reputation of the partners actually play in driving the reputation of the firm, or in relation to the reputation of the firm. And again, not surprisingly, the small firms we asked about, if the founding partners were to leave your firm, how much business do you estimate you would lose? And these smaller firms, over half of the smaller firms said that they would lose, half their business. And this decreases significantly, and you get into that larger 50 to 1,000 group, where 88% of the people said that they would lose less than 50% of their business. So still a significant impact, but and you know, not surprising that you see this kind of pattern here with these results. But what we did want to look at was where does this transition point start to happen? We look at where would you say that the public perception of your firm is driven more by the reputation of leadership versus the reputation of the company itself. And we look at that gaining scale group somewhere in that 50 to 1,000 group at the lower end of that. So let's say at about 100 people, you really see that cross where you're starting to see the reputation of the firm grow in importance and the reputation of leadership becoming less and less of a driver, and then splitting on throughout, of course, as we get into these larger firms. So obviously we've got a somewhat limited data set as we split across these four groups, but we do see we do see where this point of transition starts to happen at that 100 to 500 range, and then extend out beyond there. So our takeaway here is that the smaller firms are certainly more dependent on the reputation of their founding partners and of their leaders. And obviously there's some risk inherent in that, and so establishing a point of difference beyond this smaller group is a key step towards sustainable growth for these firms. So the implication here is to be more proactive in driving to a firm-wide strategy and extending, maybe even accelerating that point to where you let the brand take over that point of reputation. So our next finding here, or we framed as a question here for number 4, is do mid-sized firms have an identity problem? So we've sort of hinted at this in some of the results that you've seen thus far, but we wanted to probe a little bit deeper as we sorted through the data. So we pushed on that a little bit. And let's begin by looking at the self-assessment that the respondents made to their own brand. This is across everybody that responded. In your opinion, how strong of a brand do you think your firm has? And about 25% said that it is very strong. So on a scale of 1 to 10, or maybe this was even 0 to 10, they gave themselves a 9 or a 10. Another 45% came in the positive, this 7 to 8 kind of category. So generally speaking, somewhere about 70% of the respondents had a strong opinion about their brand, and 30% more on the negative side. But if we look a little bit deeper as we split across these different company sizes, we see that this mid-tier, this straddler group, as we've been calling it, is particularly unenthusiastic. So only 13% of the respondents within this group gave themselves this higher score, this 9 or 10 score about this brand. And even perhaps more telling is that 53% of them said that they have a weak brand. And as we look at that a little bit deeper into specific questions that we've asked, this continues to hold true. So you look at the patterns where we've got our boutique in purple, our big and bigger in red up top, and the two of them, as Seth alluded to earlier, there's some real interesting similarities between the biggest firms and the smallest firms about how they think about themselves, and the clear vision that they either feel internally or see themselves expressing out to the marketplace. That starts to fall a little bit as we get into our gaining scale, the green line here, and we get into our straddler group, and there's a significant drop-off here when looking at questions of defines a clear vision of what we stand for. So speaking about the brand, it's clearly communicated through our marketing. It's consistently carried out. So across all of these questions, the straddler group just rates themselves quite a bit lower than either the biggest firms or the smallest firms. Oops, sorry, jump. There we go. And then we wanted to look too at from a standard deviation standpoint, the differences in how people are responding to these questions, and we see that there is more alignment among the boutique, the gaining scale, and the big and bigger group than there is among the straddlers in how they answered these questions around brand drivers that Seth was talking about a few minutes ago. So we see that the straddlers have some pretty wide variation in how they answer these questions. And granted, a firm of 1,000 is probably more different than a firm of 4,000 as compared to the bigger, where a firm of 30,000 might actually be fairly similar to a firm of 50 or 60,000. And so you see those differences reflected in the number here. That the straddler group is fairly unaligned in how they see these particular elements as drivers of their brands. And so our takeaway here is, again, it's around this identity issue that we're seeing for this Stradler group. And here is a group that, perhaps it's because they've grown as a collection of practice areas, or perhaps they've grown as acquisitions, and they are indeed between two very different kinds of companies that they are probably competing with on a day-to-day basis. The smaller boutique, probably highly specialized firms, and these larger global firms that might extend to be full-service providers. So with number 5, I will turn it back to Seth.
Thank you. We also wanted to know how is the perceived importance of marketing in management consulting? I think anyone who's on this webinar right now feels marketing is very important to grow a consulting firm. But what is the perceived importance, particularly beyond the marketing department? We asked the question, how effectively does your firm express its brand? And what was interesting here is that brand behavior, rather than formal marketing, is seen by respondents as the most effective. So if you look at that top bar, externally through product service delivery, 40% put that in the top 2 boxes, which was agree very strongly or somewhat strongly. So they felt very positive about how they deliver, how their brand is reflected through service delivery. And that actually is a really good thing. It means that the firms that responded feel that they're, in a sense, living the brand. But you see how that drops off in the second bar, externally through marketing, only 20% in those top 2 boxes. So, there you get the sense that there's a dissatisfaction with the success of marketing versus the success of their own people and the services and solutions they offer. Again, this is perception of the people who responded. We also looked at the same question, but by firm size here. So, again, the mid-tier, that sort of problematic mid-tier firm seems to feel that their marketing is the least effective. So if you look at the top, in all 3 categories, rather, the straddlers, which is the blue bar, feel less positively about their marketing efforts, about how successfully their brand communicates than any of the others. And if you look particularly in that middle group, externally through marketing, they fall way behind. So again, there seems to be a sense that among these mid-tier firms, particularly straddlers, that they're not getting their brand message out through marketing, and they feel that more strongly than either the larger firms or the smaller firms. And this was really eye-opening for us, that marketing professionals who responded actually are less positive about the impact of brand than others in the firm. We would have expected it to be just the opposite, that marketing professionals felt very strongly about the contribution of brand to their firm's growth. But in fact, they were less positive. So that yellowish gold line on top are non-marketing executives, basically everyone who responded who was not a marketing executive. These are generally consultants, strategists, and so on. So when you ask about all the categories, attracting new business, engaging clients, building long-term relationships, attracting talent, they all felt that brand played a more important role than people who identified themselves as in the marketing department. And the dip was particularly strong in the building long-term relationships. So that was a surprise. I think there might be a bit of an identity problem among marketing people. And it's actually a great opportunity, because if you're, in a sense, if marketing's internal clients actually feel that marketing is more important, I think that's a chance to really take a higher profile within the firm. Somewhat more reassuringly, marketing people who responded tended to focus on attributes that were more outwardly focused, which you would expect of marketing folks. So whereas the corporate strategy people, those are pretty much everyone who did not self-describe themselves as marketing, use words like trustworthy, thoughtful, professional, which are sort of bland, internally focused words. The marketing people on the left use words like collaborative, client-focused, results-oriented. So that's actually, I think, a positive finding, that the marketing people were more market-focused, which is what you would hope and expect. We asked about the drivers of brand before, and here we segment it by marketing people and essentially everyone else, or corporate strategy. And what's interesting here is you see on the left, the marketing people really believe in the power of thought leadership, and that's certainly something we see in our work with consulting firms, that the marketing people that we work with feel strongly that thought leadership is really the most important sort of driver of shaping a firm's brand. Whereas you can see that the people not in marketing who responded, it falls down quite a bit. And again, it's this strong leadership that rose to the top. So I think when we delivered this at a live conference, there was a lot of conversation around the proper role of thought leadership, because many firms of all sizes invest very strongly in creating and disseminating thought leadership. But clearly there's a difference between marketing and non-marketing as to the importance of that in shaping brand. So it does seem that the power of brand is understood beyond the marketing department. That's really, I think, I think that's the positive, but it also points to the opportunity for marketing themselves to step up and kind of own the role and own the importance of the firm's brand, because they seem less positive about the impact of brand than the people who weren't in marketing. And finally, we wanted to know, how are firms deploying their brand? You know, they describe it in one way or another, as we've discussed. How are they actually getting that brand out there? We began with asking about the overall budget, what the percentage allocated to marketing, and it seemed that most of the marketing respondents who answered put it somewhere in the 2 to 5% of firm revenues, so you can see here. That's a good way of sort of kind of getting a baseline of the overall spending. And then we asked how you allocate your marketing budget. And as you can see here, if you combine the two bottom rows, trade shows, corporate events, and public relations, that's about 44%. So, you know, almost half trade shows and public relations are accounted for, or account for half the budget. And then you can see that it diminishes pretty dramatically after that. Sorry about that. And then we asked about effectiveness of the different marketing channels. And as you can see on the bottom left, we asked about external and internal. The firms, the respondents said that their website was the most effective external channel, that is for reaching clients and prospects, followed by email, digital publications, and so on, with, not surprisingly, radio being the least effective. Internally, also the website, I would imagine that's the intranet, also seen as the most effective channel. But again, if you think about this in terms of budget, trade shows, as we just saw, was the most received the most budget allocation, yet it's only seen as sort of a middling performer, whereas the firm's website is seen as the most important. So you do wonder, if you know, again, look in the right hand, you'll see trade shows and corporate events as being, you know, the largest consumer of marketing budget, and yet on the left you see that there's generally not a strong sense that it's paying off. And again, at our live event where we presented this data, there was a lot of talk about why firms do go to trade shows and events, and are they getting the return on that investment, or could they be spending it more appropriately in other channels? So it's a digital world out there, and a firm's website is the hub of its digital brand experience, and everyone seems to recognize that, overwhelmingly telling us through the survey that the website is the most effective channel for reaching, for conveying the brand to external audiences, and yet trade shows and events are still the #1 budget item. And you wonder, in a digital world, if in-person engagement is still bringing the highest return. It's really something that I think every firm needs to ask themselves, given the budget allocation.
So here we will offer a few thoughts on connecting the dots. Those are our 6 key findings in the study. And then we've got 3 additional points here. So what does this all roll up to, and what does it mean? So this is the first one. Okay, sorry. So the first one is coming back to this notion of the mid-sized firms and their need to define themselves. So we see these firms again, as I mentioned earlier, in this squeeze. They've got more resources and breadth and capabilities than the small firms, yet less focus and specialization, and they lack the market presence and the scale of the large firms. So they're kind of caught between the two, and they're in this constant state of evolution. We saw that in those words in the first part of the presentation, that they see themselves in this constant state of flux and evolution. And so the implication that we see here is around building a strong and unified culture for the mid-sized firms, and that may be their best opportunity to truly differentiate. We saw how they admire, the firms that they admire are well-defined firms, and they seem to aspire to this themselves. They want that definition. They want that strong sense of self that they can feel internally and then project out externally as well. And so getting to this is really an exercise in uncovering what it is that makes us unique. If we are a firm, again, that is a collection of practice areas, or if we are a firm that has grown by acquisition, it's about developing an exercise to uncover those ties that bind and defining what this strong and unified culture can be built around.
And this is Seth, if I could add to that, I think that a lot of the mid-size, the straddlers that we call them, are firms that have grown quite recently, and as Jonathan alluded to a second ago, they've often grown by acquisition, and I think that's reflected in how they see their brand as in a constant state of flux, reflecting the fact that the firms themselves are growing. And in fact, a lot of the work that we've done in consulting is around firms that have grown through acquisition and never really felt that they may have integrated the firm in terms of service delivery, which is why the service delivery finding, people felt very positive about how their brand is reflected in their behavior, but the brand itself and the way it's marketed has never really been integrated as well. And I think that's a big challenge. And that is the big challenge behind the results that we saw with those mid-range firms.
And the second one here, and this is really true for all professional services firms, and even by extension to many other companies out there, that your brand really walks out the door every day. Your brand is your people, and as a group, you feel that the feedback came that you feel that you communicate your brand most effectively through service delivery, through your product, and through your behavior. More so than through formal marketing or internal engagement. And honestly, this is fantastic. But the trick is in bottling this, right? Here is an opportunity to capture and codify the essence of your brand as it's expressed by the people and as it's expressed through the services that you deliver. So the fact that we already feel that we are delivering the brand more so through our behavior and through our product delivery than through our marketing suggests to us a real opportunity to try to capture that in your marketing. And even beyond your marketing, to capture that in other areas of your communications and delivery experience. So how you develop proposals and your pitch books and your thought leadership. Do these elements and do these activities reflect the brand that your people are living and are delivering upon? So is your communication that's delivered through these non-marketing means in many ways, these sales tools and things of this nature, are these delivered, are these communicating your brand in a positive way and contributing to this notion of this effective delivery of your brand and your reputation? And then demonstrate your behavior in marketing by focusing on how your brand is embodied in your people and your services. Let the market hear your people, see them at work, engage with their perspective, capitalize on the fact that this behavior that we feel that we deliver, that we are using to deliver our brand, capitalize on that in our marketing activities.
And I think just to amplify that, it's Seth again, that some of the ways that we've seen and we've actually worked with consulting firms to do that is to use things like video and other digital channels to kind of bring brand behavior out to the marketplace, so that because if that's already something that you think, and I think with some justification, that you do well, living the brand through your people, then how do you demonstrate that through marketing? Well, one of the best ways is through video, for instance, that captures not just what your partners are saying, which you can do in a white paper, for instance, but what they're doing and their personality and the way that even their everyday behavior reflects the brand. Similarly, embed the brand in your pitch books when you're going out and pitching new clients, and make sure that the behaviors that you're successfully exemplifying in the work you do is there in the pitch book when you're talking to prospects.
And behavior too can extend to how you communicate. So you think about, if we are a roll up your sleeves kind of organization, let's make sure that we reflect that in how we communicate, and whether that's in our advertising or in our websites or in our brochures or our pitch books, but having a tone of voice that is relevant and kind of resonates with who you are as an organization. And the third one here gets to this notion of the driver. Is it the partner-driven brand, or is it the firm-driven brand? Where are you on that spectrum? Is it the reputation of your partners that are driving the brand, or is it the firm itself? And where do you want to be? Will a partner-driven brand scale with your firm's growth? And obviously there are some limitations there, but partner doesn't necessarily have to mean founding partner, of course, and it could just be the senior leadership. But do we want to be a collection of individual partner or leadership brands working together, or do we want to come together under this common umbrella of the firm brand, and then how do we chart our course to get there? And building thought capital into the brand itself without tying it too close to an individual or a group, and that's one way to help push towards that firm side of the spectrum in this brand. So at a macro level, we see that trend of the distinction between that firm-driven versus partner-driven brand. But thinking about your firm specifically, it may well come down to research. Look to internal and external research to determine the core drivers of your brand, and whether that comes from your leadership or whether that comes from the sense of heritage, of culture, of approach that is embodied in your people, that's felt internally and then reflected externally as well. So that concludes the prepared portion of the report that we've developed. We do have a couple of questions, and we certainly have time for a couple more that you might include as well. Note that we will be making the survey is available online, and we'll have the URL has been available throughout. It's Big Management Consulting. It's kind of abbreviated, so we'll show it to you in a moment. BigManagementConsulting.com. And I think Seth's going to address the first question that we've received here.
Yeah. So one of the questions we got was, it's all very well to say, our brand, we don't have a lot of confidence in our brand. It should be stronger. How do you go about developing a brand, a unique value proposition that gets you to a solid definition and a strategy for articulating it? And we believe strongly in research. I suspect most of you, many of you, all of you on the phone agree with that as well. And really the first step is to understand what your brand stands for. That's what Jonathan was just talking about. You need to find out through research with your own people, and then through your clients and out in the marketplace with non-clients, what do you stand for in the minds of the constituencies that are most important to you, clients and prospects in particular. And then our research would we would talk to the leadership of the firm and say, well, where do you want your firm to go? And generally, in almost every case, there's a gap between those two places where you would like your firm to go and where your firm, in fact, is from a perceptual basis. And what a brand can do is bridge that gap. It can help change the perceptions of your external audiences to move them to where your management's vision lies. So it always begins with research, understanding where you are, where you want to be, and what the gap is between those two places. And there's almost always a gap with any organization.
There's a question, too, about the difference between strong leadership and thought leadership. And certainly there was a fairly robust discussion, as Seth mentioned, around thought leadership when we did present these results in New York a few weeks back, about how more and more companies are certainly looking to thought leadership as a way to distinguish themselves in the marketplace, to the point where it can be certainly a lot of noise there around everybody's thought leadership and how that is positioned. What in the survey here, those terms were intended to suggest thought leadership as materials that would be kind of industry-leading thought that is either published or spoken about at various forums, versus strong leadership being more about the internal leadership and the ability of that leadership to either drive the attention externally, or that people rally around and see this kind of cult of personality around that leadership. But for thought leadership, it's really a content story of how do we deliver our content out to the market in a way that makes us unique and has the market look to us as a specialist or for some set of expertise, as a thought leader, and expressing that in the space, versus the people that we might rally around, and this cult of personality sense that's either felt internally or externally. I think for the way it was asked in much of the survey, it tended to have a bit more of an internal focus on the term strong leadership, and how we are identified by our people or by the expertise and the content that we develop as an organization.
If I could amplify that a bit, not only in management consulting, but in almost every field that we work in as a branding agency, our clients at some point will say, what we really need to do is emphasize thought leadership. That's the way you compete in this business, whether it's technology or healthcare or consulting, venture capital. And we always say, well, where can you actually lead? If you want to be a thought leader, what can you lead in? Because especially in management consulting, and especially if you're not one of the larger firms, you're competing with firms that have entire departments devoted to creating content. So where can you lead? We worked with a mid-size accounting and consulting firm, actually quite large, top 15, I would say, and who did a lot of really very impressive content, mostly around very technical regulatory issues. And when we did our client research, we would ask the clients of this firm, what do you think of the thought leadership, the content that you're being provided by this firm? And most of them said, well, I don't get any content from them. And of course, we went back to the client, and they do get the content. It's emailed to them regularly. They just don't even see it. It's off their radar. And in fact, when we press them, these are the clients, they would often say, well, I'll wait for E&Y to issue something on this. I don't need this firm, even though they're my auditors or my consultant or my tax firm. I don't need them to tell me this. So again, it goes back to that question, if you want to issue thought leadership, what can you lead with? And remember the result that we showed you earlier in this presentation, where the people in marketing put thought leadership as the #1 driver of their brand, but the non-marketing folks, the strategists, had it pretty much in the middle. They had a number of things above it that drove brand. So I think it's an interesting place, right? We're at an interesting point where thought leadership has become so ubiquitous and content marketing so widespread that it's no longer enough to do it. You have to do it thoughtfully, and you have to make sure that your thought leadership reflects your brand, and rather than that in itself it is not going to be your brand. It needs to reflect the brand values that you've already established. And one other point, not to belabor this, but there was a lot of discussion at the live session in New York about the changing nature of content in itself, and the word that kept coming up was snackables. You're probably all aware of that concept, where it's become people are digesting smaller and smaller bits of content, thus the word snackable. and they're looking at it often on mobile devices. And so, the white papers that I imagine most people listening to this webinar right now are very good at creating may not be the form of content that most people are looking to receive, or at least not initially receive. So we had a long and rich conversation around the notion of snackables.
But I think it is a great point to think about thought leadership as what is the thought leadership that makes the most sense for your organization, and how are you're not going to compete with everybody and being the smartest across the board in all categories. So what is the finite way that you can define either a market or a challenge or a problem and address that and really express your point of view on that particular item in a way that makes sense for your organization and your approach, and have your approach and your voice and your style be reflected back in your thought leadership. Sometimes that's a challenge if these things are developed in different parts of the organization, or that kind of quote unquote thought leadership is not developed with this notion of, that doesn't go through the same kind of editorial rigor with that a brochure might to reflect our brand voice. But it really should. I mean, it really should reflect the same, that it's coming from the same place, and it should only come from you as an organization.
Are there any more questions? Feel free to send them over to us. We have a couple of minutes left.
So again, so the survey, the report itself is not exactly in this form, is currently posted at the URL you see here. This webinar will be posted shortly on the site at the same address as well. So with the audio, so the presentation with the audio will be posted. I'm not exactly sure when, but soon will be posted at this URL. But many of the charts that we went through in perhaps in a slightly different form are already posted here at bigmanagementconsulting.com. So feel free to share it among your friends and colleagues.
And also, you have our email addresses there earlier in the presentation, and please contact us with any questions or observations. We'd love to keep the dialogue going.
Great. Well, I would like to personally thank you both, Jonathan and Seth, for sharing with us today. I'm hopeful that those that dialed in got a lot of value out of it, and would also like to thank the whole team at DeSantis Brendel for their hard work putting this together. And AMCF really values your membership, and we look forward to working with you in the future. We will be, as we said before, sending the presentation to all, and it will also be posted on the AMCF members only section of the website. So thanks again to everyone, and have a great rest of your day.